The Johannesburg Stock Exchange is Africa's largest exchange by far, with the largest market cap and deepest liquidity. It was established nearly 120 years ago and listed on its own platform in 2006. The JSE has a market cap of 6.3 billion rand, a price to earnings ratio of 15.5 and a dividend yield of 2.9%. And it has a monopoly.
Yes, look, this is the house that Russell Loebscher built, although he's since retired. Nicky Newton-King is the CEO, doing a fine job. You're right, they're a little bit like the airports company. You know, you can only deal with them, and that's how it works. So the market participants sort of have a grudging respect for them because they are well run up to, you know, to a large extent. They have quite high fees by global standards, but again, it's constrained by exchange control. So our companies locally can only really list here, and our institutions can only trade here. So they do have a powerful position with regard to data and with their market centrality, having concentrated bonds and derivatives and cash equities in the local market.
The JSE Limited, Tsepo, your opinion?
Sure. I'm not sure if I'm allowed to say anything negative about them. I might get into a little bit of trouble, but anyways, I'll have a stab at it. It is a
You mean you're going with a negative? Apologies to Nicky Newton-King and her team. It's certainly not me, it's Tsepo.
Oh, well, it is a well-run business. I think they've managed to preserve earnings tremendously well over the last year, given how difficult the environment has been globally for businesses such as this. Nice mix in terms of selling market data, and they do quite well from that. We've seen that coming through over the last year. It probably is a little bit expensive compared to global peers, but that benefits the business. We might complain about it, but it benefits them.
What about the Africa opportunity here? They've had that foray into Africa, almost pulled back a little. Do you think it is part of the agenda going forward?
I don't really see it working too well because most African countries are keen to have their own exchange. And we've seen that with CNBC following those exchanges all around the continent, setting up bureaus and so on. So I don't really think that's a major opportunity. Remember also, Tsepo's comment is these businesses like London and New York haven't done well because they've been chopped up by big institutions trading with each other via dark pools. All of the volumes have gone elsewhere, and it's definitely not easy. The bright spark is derivatives trading, which for some reason or another is something that happens more and more every year, so people like that. Yeah. So I don't know. I just think there could come a time in years to come where some elements of that monopoly dominant position start to kind of filter away.
But that may be a long way off.
Exactly.
So in the interim,
I think they continue to do well, pay good dividends. Look, they're bumbling a bit with the IT systems, not on the trading side, but on the settlement side, they've been a bit recalcitrant. And remember, they wrote off nearly 400 million rand on a failed project to upgrade the IT systems. But again, you know, who else?
But it's coming right.
Yeah.
Tsepo? I see you are both sweating in studio. Come, share your thoughts.
Look, ultimately when you're taking a position or you're taking a view on the JSE, you're not only taking a view on the all share going up or the markets in general going up, but also volumes. And that volume data has been a little bit patchy of late, and we're seeing the equity component a little soft. The big growth in that side is a little bit of concern for me, and given the issues that Paul raised, a little lukewarm here.
So back to you, Paul, hot or not on JSE?
No, I like the management team and the business positioning, but I think they're more strategic risks than opportunities, so I'm going to go with not hot.
Tsepo?
It's okay, so I'm going to go not hot.